There are 5 investing mistakes I will never make, and you shouldn't too, because they can cost you thousands of dollars, even hundreds of thousands of dollars. So if you want to build wealth fast, like me, then please avoid these mistakes. Now, most of them I have made myself, and others I wanted to include because they're highly relevant for you too. So if you want to maximize your money, keep watching. If we haven't met, I'm Sophia. I love to talk about money and mistakes. The mistakes I made during the past decade where I've been learning about personal finance and investing. And on this channel, we explore the tips and strategies on how to build wealth, but without living frugal. If that sounds like you, you're invited to subscribe. And let's start with mistake number 1, which is get rich quick investments. I bet you've seen this. You click on the video just like this one, and then right before I start talking, you see an ad where they say something like, let me show you how I earned $1 gazillion by trading, and then fill in blank. Now those are get rich quick investments. And if it were so easy to make a ton of money with them, then everyone would do it. Now, are there people who make money with options trading, crypto trading, and other speculative investment vehicles that come to mind? Yes, there are. But is this a reliable and predictable way for us with a full-time job to turn our money into more money? No, unfortunately, it's not. In fact, a study showed that less than 1% of day traders had predictable profits within a 1-year time frame. And when you look not just at studies like this, but also at what professional investors, like the most successful investors of our time, are doing, they are in for the long haul. So most of them are long-term investors, and the ones who actually make money with these short-term vehicles, those are the big institutions. The big institutions who can also afford the loss. And not just that, but also to make margins like this work, they invest hundreds of millions of dollars. And so the probability for us to lose money is just exceptionally high. So instead of those get-rich-quick investments, I put the majority of my money into long-term and low-cost investments. Just assets that are more promising, like stocks and real estate. Mistake number 2 is ignoring fees. Now, how does 1.5% sound to you? Sounds very little, right? And yet this can make a difference of more than $50,000. Let me show you. Let's say Josh invests $100,000 at an average return of 7% per year. And let's say Josh invested into a mutual fund that costs him 1.5% per year. So after 20 years, Josh would end up with $291,776. So his money grew, which is good. But let's look at Anna on the other hand. She also invests $100,000, also at an average return of 7% per year. But she invests in a low-cost index fund costing 0.5% per year. And she ends up, after 20 years, with $350,365. Now that is a difference of $60,589. That is a year's salary. 1 whole year of work gone just because of 1% more in cost. Isn't that crazy? And I have actually made that mistake myself. So my very first own investment had costs like that. And I haven't really checked in the beginning, and I also didn't really understand all of this at that time. But when I found out, first I stopped, putting more money into the investment, and eventually sometime later I sold it. And since then, I only invest in low-cost index funds. Mistake number 3 is ignoring automation. Now, I think that automation might be the most impactful invention of our time when it comes to managing our money. Because the technology we have access to, that wasn't possible 50 years ago. Now, the way I imagine that worked 50 years ago, or maybe a bit more than 50 years ago, is you had your check, and you had to go to a bank and deposit that money, in order to save it. And if you wanted to invest in the stock market, you actually had to call someone at the stock exchange who would then place your order. And nowadays, we just sit on the sofa with a cup of tea in our hand and we click a button on our smartphone. Isn't that amazing? And it's not even clicking that button repeatedly, because you actually only have to set it up once and then it's done forever if you place it as a recurring order. And I think the major advantage of this is that you don't have to take a decision every time. You only have to take that decision once and then it's done. But if you do not automate, then you have to make that decision every time. And then one thing is that investing becomes inconsistent. And the other thing is also, I think you get way more tempted to time the market. So to try to invest your money at the right time. But the truth is, there isn't really a right time, because time in the market is better than timing the market. So the best time to invest is always right when you have the money. And that is how I handle that as well. Mistake number 4 is not aligning your investments with your financial goals and also your risk tolerance. Let me explain that with a personal example, because I have kind of made that mistake and then I corrected it later on. So my mom had invested some money for me when I was still very young, and she had put money into an investment that was very low risk, but therefore also quite low return. So it was a safe investment. And I kept this investment for a relatively long time because I guess I thought, you know what, it's okay to have some safe investments in your portfolio and that money can keep working for me. And now I'm also working and I put more and more money towards riskier investments. And then I just keep adding there from my salary. And at that time, I didn't really have goals. So except for the goal, I want to start to invest, but not goals that were more specific than that. But then sometime later, I thought more and more about this. And then it became, okay, I want to build wealth fast so that I can become financially free. And that then was the time where those safe investments were not aligned with my goal anymore. Because for building wealth fast, those investments were just working too slow. And then I actually ended up selling them and putting the same money into higher risk investments instead. So higher risk, but also higher potential return. Now, one alternative scenario could be you invest exactly like your favorite financial influencer, but at some point, because there's maybe many high risk investments involved, you start panicking because the market takes a dip and you sell your investments at a loss. And that scenario I just talked about is when your investments are not aligned with your risk tolerance. So if you do have a hard time seeing your investments go into the red, then it might be better for you to take on more safe investments. So you align your investment strategy with your financial goals and also with your risk tolerance. And mistake number 5 is impulse investing. So imagine you read the news, and they write or talk about that awesome new company, and you get excited and you go all in. You go all in with your money just to see the stock price plummet after a few weeks. Okay, maybe not, maybe it was a good tip. But then at some point the mood changes, the mood in the media, and everyone on the news predicts either the downfall of this particular investment or a recession in general. And then you also panic and you sell. And both of these scenarios are impulse investing behaviors, because you let yourself influence by outside sources. And that unfortunately can lead to buying high and selling low, which is exactly the order that we do not want. So what I recommend and do myself instead is to set a strategy before you start investing, preferably a long-term strategy, and then you just stick with the strategy. That's how I do it, and having such a strategy, protects you from those influences from the news. Now let me know, what was your biggest investing mistake? Comment down below, I would really like to know. Otherwise, I hope you learned something or got some inspiration. If you're still here, thank you for watching this far. Subscribe if you aren't already, and I'll see you in the next video. Bye-bye.